we're going to learn about a few topics that are very important for your journey as you'll be learning how to trade. So today we're going to learn about what is a range, right? And also how low is too low and how high is too high. And also we're going to learn about what does it mean when we say an imbalance is in control. And the fourth thing that we're going to learn about, or we're going to talk about, will be what should you do if price is too high or too low in the range, right? So all these guys are very important for you to know and to understand as a trader. Why? Because whenever you look at your chart or your price action on your chart is either it's high or it's low, meaning high and its lows, it communicates few things or two things to you. Actually, it communicates three things to you. All right, how high the price is, it can tell you that it's time to buy or it's time to sell, or sometimes it's like it's a time for you to do nothing, right? Because as a trader, whenever you look on your chart, you have to perceive that or say, ask that chart or that pair that you are trading questions, all right? And the answers that will be given by the movement or by the structure of just chart, it have to communicate something to you, all right? And those two are three things that always will be communicated to you as a trader is whether you are buying, you are selling, or doing nothing, right? Doing nothing is very important and is part of trading, all right? Because as a trader, it's not every time or every day that you have to trade. Some days just do nothing. Why? Because you wouldn't be having the chart or the pair you are trading, it won't be giving you any opportunities to be able to execute your trades. So in that case, what do? You just sit on your hands. You do nothing, okay? And doing nothing, it means you can look another pair or look for opportunities on different pairs. It can be saying you can look for trading opportunities on stocks, indices, and yeah, sometimes even on crypto, all right? Because the nice thing about what I'm teaching you guys, this strategy you can use actually to analyze any market. You can trade Forex, stocks, indices, and crypto with this strategy that I'm teaching you. Actually, almost every strategy that you will learn out there, of like example, how to trade Forex, it enables you also to apply the same rules when you are trading any other market. As long as that market has a chart, it's a market that you can trade, right? And some of to start with the definition of the range, you should be aware of these things here. I guess all of you here, you know how to draw imbalances, and you also know how to draw trend lines, and you also know how to define a trend, right? So these are the prerequisites that you have to know. Okay. Hey, let me do that. These are the only prerequisites that you have to know for this session. You have to know how to draw imbalances. You have to know how to draw a trend line. And also you have to know what a trend is, right? Because remember, we are trading imbalances, and trend lines that are helping us to locate those imbalances. And as the imbalances are created, they are creating what you call a trend. A trend is either we are on an uptrend, a downtrend, consolidation, or ranging market. All right. Those are the key things that you have to be aware of as a trader. All right. Yeah. So now, if you know how to locate imbalances and assessing the trend of a certain time frame, now you have to also know now, with that information that you have, how to put that into context. All right. So this session is more about how to put all this now into context. Okay. You learned all about all these nice terms and all those nice structures that you've seen on the charts, right? So now, how do we put all this into context? Okay, because that is what is very important now for you to know and to understand as a trader. Okay, because why? When you trade supply and demand, there will always be levels, all right, or there will always be imbalances, okay, on every time frames, all right, and there'll be always those supply levels in every time frame. Okay, so all those levels, you'll have levels that are in control, and you'll have levels that are eliminated, that you can't trade. Yes, it will be a level, but you sometimes you wouldn't want to trade them. Why? Because when you're reading the market, it told you no, that level is a level that you can't trade. Okay. Yes. So why sometimes people will lose when trading is that sometimes when you are trading, you lose most of the time when you are buying in the wrong place, okay, whereby everyone is buying and when now you decided to sell. Okay, so you have to always know where everyone is, and in this case you have to always know where the big guys are, like example, the banks, okay, these big corporations that moves the market. You have to always know where they are, okay, and they are leaving footprints whenever when they execute their positions. All right, those footprints are what I call, or what we call, imbalances, okay, which enable you to wait, then your position get triggered, then you go up, or you go on the flow with them. Sometimes people, they call those people market makers. All right, it's very important as a trader to see the chart and find where market makers, they left the trails. Okay, yes. So now with this, guys, we're going to learn about the definition of a range, and to just say that in short, the supply and demand range, guys, it is just is just to say how expensive and how cheap any given asset is. All right, that's what a range is. Okay, a range, in short, the supply and demand range is the percentage used, okay, is the percentage used to define how expensive or cheap any asset is. And just apply this on your common understanding or knowledge. You know that when something is cheap, you tend to buy more, right? And when something is expensive, people, they tend to do what? To sell for profit. All right. Typical example, when you go to, let's say you own a plot, right? When that plot that you own, maybe that land, when it becomes super expensive, and when you bought it while it was cheap, let's say you bought a plot that was 100,000, okay? And now all of a sudden, those plots now is around 400,000, okay? Which means it's a good time for you who bought cheap to sell, okay? So the same thing, it applies here, guys. With the range, you determine how expensive that particular asset is. And then you either buy, you either sell based on the information you'll be given or communicated by the chart. All right. So now every time frame, guys, has its own range. All right. Every time frame, we have different time frames on the charts, and each and every time frame has its own range. Okay, so every time frame, guys, when you trade, you have to calculate the range, and it should be respected. Okay, and the other thing, usually when you draw a range, we have to use two opposing imbalances. Whenever you open your chart, you'll always find the latest imbalances. You'll always find these two imbalances. Either you find a supply, or it's either you find, actually you find both. You find both the demand, the last demand, and the last supply on a chart. Okay, those are the two opposing imbalances that you will always find. All right, so why you have to always use both supply and demand? The main reason is a single imbalance, guys, it cannot tell you how far or how close the price of that imbalance is, okay, or that pair is. All right, and with that, if you don't know that, you won't be able to establish the range or the percentage. Okay, so and then there are scenarios whereby the pair that you are trading is printing the all-time highs. All-time highs here, guys, we mean when the pair, it keeps on moving up, 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 up. Okay, so even in those scenarios, guys, there is a way to calculate that. All right, so in an all-time highs and all-time lows scenarios, guys, we will not able to calculate, yes, the range, because why? You wouldn't be having two opposing imbalances. Okay, so what will we do there? There's a certain rule that will apply to be able to trade those trending markets. Okay, and also with that, it will help us also to know when the price is high, too high. Okay, so I guess for some of you already have an idea that, like I said before, that trend lines, they usually help us to determine when is time for us to sell or when is time for us to buy. All right, okay. So now, how low is too low and how high is too high? As a rule of thumb, guys, we will use 20% and 80% to determine that the underlying asset is too high or is too low in the range to trade against. All right. On the chart for this, I'll demonstrate this, guys. On the chart, you look for those two points, right? The 20% and the 80% to determine how high or how low that asset is. Okay. All right. And then the other thing is something that we call an imbalance in control. So whenever you look on the chart, you'll always find the price or the pattern that is holding the market, or that is controlling the market. Okay, so that also I will show you more about it, what that actually means. And this concept, guys, is very important. Okay, and the other thing that we have to be aware of is what should I do if price is too high or too low in the range. So like there, guys, remember, if the bigger time frame always come first, and in the long run, the bigger time frame will always win most of the time. All right, why is that so? Because market makers, they execute trades based on the bigger time frame. Only as retail traders will trade, as we trade this lower time frame. Mostly market makers or big institutions, they trade based on the weekly and the monthly time frames. All right, and lower like daily going down, it's us retail traders, people who with small money, that will trade those time frames. Okay, so also I will be explaining that, guys, for you. All right, okay, so yes, now
Yes.
let's open the chart. Actually, before I open the chart, let me add another page here so that I can draw something here. Okay, so whenever you look at the charts, you always have to find two areas like this, and this area is supply. Okay, and this one here is demand. Okay, so what does this mean? It means if you have somehow price moving up like this, okay, when you get here, it means, man, it's time for you to do what? To sell. Price, guys, it always moves from one area to another. It means, example, if the market is uptrending or the market is going up, price will move from a demand to the next supply. So when it gets to the supply area, here price, most of the time, it turns from supply now to the demand area. Okay, and then from here again, price will do what? Will repeat. Okay, so these two areas here, guys, are what I said is the range. Okay, this is the range. Just note that this is the range. The range meaning you expect price to move between these two areas. Okay, so now let's say this one area here is the current supply, and this one is the current demand. So now to be able to determine your range, you will always have the 20%, and let me just do this. This one, let's say, is 50, and then this one. Okay, I'll explain what this means. Okay. Okay. So this sometimes you can actually even do on your chart. Okay. So this one, you can see that line is in the middle. That is 50%, right? That is 50%. And this one, you can say this one is 25. Okay.
Yes.
So most of the time, you can actually even say, actually this one here, sorry. Let's see, we are going up, okay? So 50
is the highest.
I'll say 80%. And here I'll say 20, 20%. All right. So this is how you look at your chart. This is how you look at your time frame. Okay. So what does this mean? It means anything. Actually, here you can have, let me just draw this. Maybe here, in between here, you can have maybe 75% or so. Okay. So look here. What this means is this. Actually, anything under here, if you can guess what do you do here? Any price action that is happening here, what do you do? Are you selling or you are buying? When the chart is dwindling in here, if you guess that this is the buy areas, then you are correct. From 20% to 80%, we don't expect you as a trader to be selling there. We expect you to be buying. So when you get to 80%, here you have to, most of the time, you have to exit your positions. All right. Why? Because this area here, when price is moving from here going up, okay, we expect you to buy until here. When price is moving from this supply going down, we expect you to be selling from here until you reach this area. Okay. When you get to 20%, you stop selling. What do? You prepare now for the buy positions. Okay. So anything between,
yeah,
you can say this is 0. Okay. Anything between 0% to 80, here you buy. Okay. Anything between 100% to here, you do what? You sell. Okay. That is how the range works. Okay. Let me explain that further for you. So why most of the time do we exit positions when we are at 80%? Example, if you are on a buy, is because there are times whereby price, it won't reach exactly that supply. It will maybe 10 years there and then go down. All right. So usually these guys, it happens also following a certain rule, the certain rules. Like example, if you remember well, we said, like example, if price comes on the first test of this demand here, we expect price to go up. Okay. On the second retest here, there's a high possibility that price will break that area. All right. You have to also consider that. All right. So now, I'm going to show you this on a chart. Let me open a chart that I can show you guys. All right, where is my, okay. Here. Okay, which pair can I open? Yeah, I think even if this one here, okay. Let's do this one. Okay, all right. Yeah, let's I guess you can see my screen on this chart here. So on this screen here, remember how we analyze. We said you connect the latest two values, right? So which means our trend line here, it will be like this. And break of a trend line, what does it create? It creates an imbalance, meaning an area where you can sell, okay? And here, we look down further here. Any valid supply here? Yes, here. Oh, okay. Sorry, I thought I was showing supply. Okay, this was the valid one. All right, which means the latest area, the previous latest area was this. I'm not sure what was happening here. 2020. Okay, I think this candle, it was, yeah. Yeah, sometimes usually you'll find it this was when Corona started. You can see how big that candle was. Let me see if I can find a chart that is not that manipulated. Okay, measures. Okay, pound CAD on this one. Let's see on the monthly. Mhm. Okay, all right. Let's draw trend lines. Pick there. Which one is the latest one? The latest trend line is like this. Okay. Break of this trend line, it means we have an area of interest here. And then what about for the upside? A valley drop here. Which one is the latest on the monthly here? Down there. Okay, it's down. Okay, and then the latest one here. Let me try to bisect this chart. Okay, and what happened here? This area was eliminated. That's good. And then what happening here? We still have here this area which was in control. And then a valley here. We should be having this area and another one here to this out. Okay. I'm trying here. What I'm doing here, I'm trying to find if will this be the best pair to do this for you guys, to explain this concept well. Okay. Delete. Right. So let's look at this weekly chart here. We have this area here, and then another area here. Okay, so this area are the only two areas controlling this pair on the weekly. Okay, so why am I saying that? This is a trend line, right? A valley peak, a break of a trend line, it creates a supply here. Okay, and still here, look here, drop down. These are two V's. Okay, here, break of a trend line here, it creates a supply here. So these were the only two valid, these are currently the only two valid zones, right? So the concept is like this. I draw my range, okay? These are my range, right? And the middle should be somewhere here, okay? And 20% and 20%. Okay. Okay, I'm going to delete this trend lines because you see now why I had to. I was just drawing this to show you why I'm saying these two areas are the ones that are actually controlling the market. Okay, so now look, this area is controlling the market on the weekly. Why? Because this is a valid supply area. So when price came here, when price came in this area, it bounced, right? It tested this supply and then it fell. So we expect price to come down here. As price will be coming to test this area, we expect it to bounce back. So meaning at this point in time, with USD CAD on the weekly time frame, we are no longer actually buying. We are no longer selling this pair based on the weekly time frame. Okay, so when you are trading in the weekly time frame, it means you should be waiting somewhere here for your buy position. Oh, you can see here, there already I have my buy limit set there. And if you are on a, when you entered our sell, we entered our sell here, all right? So this sell position have to, like, as we reached here, already here, people were taking their profits and waiting for another opportunities. So look, price, it moves from this weekly demand up. It reached this supply. Again, price came here. So look, when it came here, this is a 20% area, if you remember well. So when it touched the 20% area, what happened? It reversed. Went back again to test this area. All right. So again, it went back here. Look, when it tested this 20% area, it immediately did what? The next candle on the weekly, it rallied high, and then again it dropped. Okay, so the expectation is for price to drop further to this area. When it reaches this area, I expect price to go up and break area. Why? Because this area is no longer strong. It's a weak zone now. Why? Because it's been tested countless
Let's go
times.
home.
Okay. Let me try to mute someone here is disturbing us. Okay.
How much money do you have?
Okay, so look here. So now with the range, what I'm trying to explain here is that when price passes this area, you are not expected to be selling that pair. What do? You wait for the buy opportunities. And buying, you don't just buy when it reaches this area. You have to wait for a zone or what we call an imbalance, right? So an imbalance will be created that enables you to buy, okay? So look here. This is on the daily. When you look on the daily still, you can see how price how it been moving, going up again, creating all those RVs, reached this area, and though it's this thing is showing still on the daily, but we know that this area it's a weekly area, which means, like I said, the bigger time frame, it will always win. All right. So when price reached this area, because this is a weekly area already embedded on this is a daily area embedded on a weekly time frame, it touched this area and then went down. Okay, on our 20% area here, price bounced, went back again, touched our 80% again here, which will be a sell. Okay, so what I'm trying to show you here is that price, it will always bounce between two areas. All right, and those two areas, we always call them the areas that are controlling the market. All right, let me check something on another pair. Maybe this Euro, AUD, and Z. Okay, object list. Delete so that we can see all this nicely. Yeah, look here. Let's say on the daily time frame, the areas that were controlling the market. This is a demand zone, and this is a supply zone. These areas are the ones that been controlling the market. Let me just push it through this side so you can see this. So what happens? Can do again. This is the middle of your daily time frame. Here 20%, here 80%. Price went up, touched, bounced down, went up again, touched. Let's say 1, 2, 1, 2, 3. On the third time, actually after that it went back a bit and then it broke that area. And then again at the top, first touch 1, 2, 3. And guess what? The second time it broke this area. Okay. So whenever the price breaks this area, the supply that is next to that area, we call it is the one that broke the area, meaning is the area that is strong. Okay, so whenever where you see price been bouncing back up and down, when it moves away from that area, always there will be a zone or a footprint that will tell you that now you can be prepared to put your buy order there or buy limit order here. So what happened? Broke, and then after that, what happened? Went down again, and it went up. This is Euro NZD. So when you look further, even if you can go to the weekly, let me show you something on the weekly. So on the weekly, when you look at this pair, again, what we're going to do, we're going to find our supplies and demand. That's area, and that's the area. Okay, so here, this was the first touch, second one. And when you are here, this is monthly. So on the weekly time frame, we are already high. Even if you have to draw your things here, if you have to draw, just to bisect your chart, okay, here, this area where we are, we shouldn't be buying, right? So we should be waiting for what you call confirmation, and then we enter our sell positions, all right? And when price comes down here, we buy. At this point in time, on the weekly, it's entered the sell area, all right? It entered the sell area, though when you look on the daily, if you don't understand this concept, when you look at the daily, you will find that, oh, price is really rallying or is going up, okay? You will think, oh no, this pair is going up, I have to do what? Buy. But actually it's a trap. So let me show you what I mean by confirmation, okay? Let me draw this area. Okay, look. Again, when you look at this area here, there's a nice mountain or inverted V here. So it meaning on the daily, we have this area, 1 is the one that, okay, why am I saying that? Look, when you draw this trend line, it's connect the latest two valleys. I get it. So meaning this is your supply area. So here you can actually do what? You enter your sell position there, your stop loss, it just goes just above this area. Why? Now we expect price to move down below to this area, to this area here. Okay, why? Because this is the only demand that is available here. All right, so AUD and ZD did what you call, it's a confirmation entry. Why? Because it took out this CP, which was a demand, all right? So based on this, we call this a confirmation entry. If from the previous sessions, remember we said, how do you define an uptrend and a downtrend? We said something like this. We said, as price will be moving up like this, when you find price moving up like this, these are two valleys, I get it. And then when it's moving down, it will be always like this again, I get it. So now, as price moves up, if price eliminates, let's say it crosses here, and then it eliminates this supply, which means now we're doing what? A price will reverse and goes to the nearest area, which will be in this case, for this pair, it will be a demand, which means the nearest demand after this, price will come down to test this demand. In this case, the valid strong demand that is controlling this market now is this one here. Okay, and this area, it's our supply. Okay, so that is why it's very important for you to understand what is happening at the curve. I mean, at the curve or at the range. You determine the range or how far the market is. Okay, clear my drawings there. Okay, let me share where's my blackboard, my whiteboard here. Okay. So now, let's look what, okay, actually here, though I already explained this, we're going to talk about what an imbalance in control. So when you look at your chart, like I said here, there will be always an imbalance that is controlling the market, or there will always be a supply that is controlling the market. So in this particular pair that we analyze, this is the only area that is controlling the market. So meaning controlling the market, it means when price started to move from this area below. Okay, where's my annotations here? Okay, when price started to move from this area here, okay, I think I'll quite my here. Okay, Yeah, meaning this is the only area that is controlling the market. I get it. And then the other one that is controlling, that was controlling this market was this area here. Why? Like I always have been teaching you guys. Oh, okay. Where's the straight line here? It's this one. So a break of a trend line. We said a break of a trend line, it creates a demand here. Look, it was a touch, price reversed, tested this area. And after this, we expect price to go to this area. Okay. So what did it do? It moved. Yes, it went to that area. So going to this area, which sometimes we call it an arrival zone, now we expect price to 10. Yeah, go further down. Why will price 10 here? It's because everyone, when price gets there, everyone or the market makers that say, no, this pair now is expensive to buy. What do? We are selling it. Okay. That is why price will move or return from here. So now for price to return here, for you now as a trader who trades supply and demand, you use something we call confirmation trades. Confirmation meaning you become extra cautious to say, will it be really a valid trade? Yeah, you look for the nearest supply or for the nearest demand, which in this case was this one. Price, what happened? Price went down, removed it. Okay. Removing an area or taking out a zone, it means price reversed and did what? Took out that zone, like it crossed the base of that area. So in this case, the basing of this one was like this. Look, it crossed it. Crossing it meaning this area is no longer that strong that it can hold the market. So the only area that is strong to hold the market is this one. So price have to touch this area, and then we might find that by Friday, we will be already moving down here. Okay. So meaning those two areas were the only two areas that were in control. Let's see if there's anything that I forgot here. Whiteboard. Yeah. So this this question is already answered. What should you do if price is too high or too low? When price is too high, you do what? You prepare to enter you sell. When price is too low, you buy. That's how simple, guys, this it is. Okay. So now what you need to do as an individual is now find time, look at the charts, and try to identify where price is turning. Okay. So you realize that on the bigger time frames, price is not just turning anywhere like where it likes. It just turns because there's an area there. Okay. Maybe as the last thing, let me show you more about that so that you guys could always be aware of why price will always turn. Let me look. Yeah. So let's look at this area here. Okay. Price went up, and then when it reached this area, it turned. Why did price turn there? let's draw this line. I bet if we go further into from the previous the middle one, okay. What's happening with my Zoom? What's happening with my Zoom here? Okay. Okay, yes, I was here. All right. I was here. Okay. Okay. I wanted to show you something here. Okay. Oh, on the monthly, why did price turn here? When you scroll further to your left, you can see that there's no any area here. Okay. But as a trader, how are you be able to trade that area or to find that this area it's tradable? If you go to lower time frames, look, this was a higher high. What happens? We have a valid area here, okay? And we have a valid trend line here, okay? All right. So you will have missed. You will have okay. This area was a supply. Why this area was a a demand? Why? Is because it took out this area, went up, reverse tested this demand, went up again. You make your profit, okay? And then what happened? It went down. When it went down the second time, like I always tell you guys that usually the first touch to an area, it's a highly it's a high probability chance. There's a high probability that it will be it will work out. Second time, it just passed. Okay, so when it passed this area now, it became a supply. So if you're trading this, this is where you set your sell limit. So price didn't go there to test it, which is normal. Sometimes price can fail to test the area. So, and then what happened more? This was also a valid area. So look, price touched this area, stalled a bit. And what happened next? It broke it. And then it produced this area, but this area, you wouldn't trade it. Why? Because there's no nice formation here. The structure here is poor. Okay, so the only possibility for you on here, because these are the latest values will be like 1 and 2 at trend line to connect this, okay? And price broke the trend line. It left the demand zone where you set. What happens? It goes up again. So here, nice V's again here. We have a rally base high. Here again, CP, 3 CPs goes here. And then it will also create a nice area here, the valid one here, okay? So now the nice thing about this, let me just not redraw it that way. You have failed on this first touch, but if you apply what there's a rule I was sharing with some of you the previous weeks. I was telling you that usually when you do a sell or a buy, you have to create maybe extra 10 pips, because sometimes price can just fail to reach your target area just by a few pips. Where you'll always find that, oh, price actually, it turned where I set my buy order. Yeah, usually to be able to get not to miss most of trades, you have to have extra 10 pips. Yeah, there again. Okay, so let's check. Yeah, look here. You see, price is never just turns from nowhere. Wherever price turns, it turns because there was something that was happening there before. Okay. So always, price will always react to the previous price patterns. Okay. Yeah. So look here. So some of you who've been trading, they can call this support and resistance. Yeah. All right. So what is very important for you guys, look at the charts and try to actually, when you look at the charts have to convince you that that pattern that you are monitoring is actually working. You trade the pattern that you find it working. Okay. Yeah. So with that, guys, I will end the session here. And if there's anyone with any questions, feel free to ask now before we review the last week's signals that I gave